Hello, once again, Dave Knight here for 123daytrade.com. Thanks for watching. Thanks for being here. Today is our foundational day trading course, part 3, the part of the beginner course, the apprentice course, however you want to look at it. But it's part of 3, and it's going to be a 5-part course is what I've come. So it'll be most likely 4 videos with a bonus video is what I'm getting at. So today is the halfway mark of the beginner course. So congratulations on getting to at least this point in your training. So what are we going to cover today? We're going to cover a little bit more of the Williams %R. Notice that I changed a color scheme here to make it a little bit more easier for the eye to see. Blue and the fill color in gray. And we're going to talk a little bit more. We're going to talk about cycle highs and cycle lows. Let me get this in a little bit so we can talk about that looks good right there. So we want to talk about cycle high and cycle low today. You can see today you can actually see 3 different periods, right? Hopefully, if you can't see it, I'm going to show it to you. So you see this on the 10-minute chart. You see this, and then you see this. So here's a cycle high. Here's a cycle low. Here's a cycle high. We're going to talk a little bit more about what we're going to add to the charts today on the Williams %R is a moving average line of 18 period. We're going to color it red. We're going to talk about the 50 line. We're going to talk about the 20 line. And we're going to talk about the 80 line. Now basically, the way that it's been taught, this is, you think about it, this is an overbought situation, and this is an oversold situation. We're going to further clarify divergence and convergence a little bit more today, and we're going to talk about wave theory, very basic part of wave theory. That should be enough to talk about for this video and try to keep it within 30 minutes. And anything obviously we don't get covered, we'll just push it to the next video. All right. If all we knew, let's just go back here and let's talk about wave. Let's find a good pattern first. This one's looking okay. Just counting them up right now. All right, so let me smush this in a little bit so that we can see this a little bit better. All right, this will work. So let's pretend all we know is this right here is the beginning of the market. So if this would end up being what you would call in wave theory the 0 point, coinciding with this down here. If this was the beginning of the uptrend, and we're going to say it's the beginning of the uptrend because the 200 bar slope is starting to slope up right here. So this is going to be the beginning of our uptrend that's been going on basically since looks like May 31st roughly. Now, here is the first time that we got above the 20 line all through here, and this looks like the top of that price discovery, and that's also called your 1 point. So there's your wave point. Then we see this is actually filling in right through here, and the lowest of those lows is right here. That's your 2 point in wave theory. Then we see this up here. Did it make a higher high? No. It made a higher high here. This is what counts. So this is our cycle high. This is a cycle high. This is a wave part of the high, making a higher high. So what we're looking for here is higher highs and higher lows. So this is the 2-point higher low. We can see that this right here also coincides with this, which counts. So this is your 3-point. Here's your 4. And then we see this up here as our 5. And then we're going to have most likely what happens after that is an ABC correction. So this is your A, B, C, let's say, of this wave. Now, the sweet spot to catch the wave is right here, the 2-point and the 4-point. But the problem is that you're not always in front of the computer screen. So this one comes about like 10 o'clock, it looks like, in the morning. That one's not so bad. And this one here comes about like 8:20. This is, about, I don't know, maybe 9 o'clock or so. So that one's not so bad to be able to trade. So you want to take, basically you would want to take 2 to 3, and you want to take 4 to 5. Those are the two uptrends that, and you can see this line here, this 200 bar line has stayed in a nice uptrend this whole time. Hopefully you can see that. So this is your wave theory. So the way it works is 1, 2, 3, 4, 5, and then you use, a lot of times you have an ABC correction on it. This is the basic wave theory. Very, very basic. And this is how you're going to apply it into your trading as well. You're going to look for a wave count, and you're going to look for a nice trending point that you can go back and say, all right, that was a very nice wave count. Now this one ends up being the high that we can see right now, but it's not, that is also the high of the market too. It never crossed over 38.20 today. So today was the first down day that we saw since May 31st, roughly. And it's a perfect wave count, looking at this as a, just looking at it as how Ralph Nelson Elliott just applied his wave theory on a 10-minute chart, on the 10-minute chart in front of us. So let's get rid of all this right now. So let's add, what we want to do is add a simple moving average, or moving average, excuse me, onto the charts. And what we want to do is grab that property, go find it, which it's right there. We want to make it 3, make it red, and we want to change the periods to 18. And we're going to save our chart. So we've added on an added oscillator onto our Williams %R. And it's to help with the momentum of the market. And we're looking once again strictly in this range right here. Let's move this over so that you can see kind of the ABC correction. So here's your ABC correction and working its way out right now. Let me get my screen draw tool. So this was our 5-point. And C hasn't been formed yet. We still haven't had the C part of this correction yet. But this is A, this is B, and C has not been formed yet on the ABC correction yet. So wave theory would tell you that there should be another downward thrust, probably overnight, and then a little bit of a hook down here that would complete the ABC correction part of this wave. And then if it starts turning over, like the 200 bar turns over, then we'd start the 0 point. This 5 would become a 0 point at some point. You don't know that until after the fact, though. All right. So we've added on a simple moving average, an 18-period moving average, and we want to look back at this wave as an overall. So this was our 0 point. So let's add arrows this time. And then let's add another arrow up here. Whoops, don't want that. You wanted an arrow. All right, this was and then we have this part right here. Here's our higher high right there. See our higher low right there. And we grab the trend line. Go ask me, I don't know. Meant to grab an arrow, but I grabbed the trend line. And then we want to grab that right there. So as we are looking at the mark, what we're looking at is, does the wave hold the line? And it does. Does the wave, this part of it, hold the line? It holds it to here. It comes down a little bit, but never does that 18 bar go under the 50 bar line. So here's your 50 line. So if the red line, this line right here, would go under the 50 line like it does right here, it signifies that it could be a possible change of direction a little bit more. It also signifies back to this right here. This and this coincide together because this is an 18 period coming back through here. And obviously this part of it definitely gets underneath it. This gets underneath it barely. This is definitely under it. And it just helps you determine a wave count a little bit better. It's a little bit of a slower oscillator for you, but it gives you a little bit better indication of the wave itself. It helps determine trend. It helps you determine, are you still in the trend itself? Are you still in a good setup, I guess is the best way to put it. So you're coming out of your trade on this one, because you don't know if this would continue to come low. You're coming out of it around here, perhaps, and getting into it. So you're getting into it here and here. This is where your wave count would tell you. You're going up through here and you're exiting roughly in here. And then you're going again at it, and it looks like you're exiting roughly in here. Just looking at wave theory, just as a theory part of it. Now, as we move forward, we're going to get your exits and your entry points and all that into a better grasp, but just understand the principal concepts right now of wave theory. Understand that this red line here is smoothing out the information to help you make a better decision of where you are in your wave count at this point. Now you can apply this to any chart you want to, but we're just looking at the 10-minute chart right now. This is a good chart. This is a great setup here that was perfect as far as wave count goes. The only thing we're missing is the C correction on this particular trade setup right here. So, cycle highs are signified by being above your 20 line. Cycle lows are signified by being below the 80 line. And the midpoint line is kind of like, we don't really know. It could be it's not a cycle high, it's not a cycle low, it's in between. Most of your top reversals are happening on cycle highs. These are the best chances to catch the downside trade. Now, you know that if you've watched all my information, I like catching the dark side, the short side trades. So these help you. So although this come down, the red line actually comes down underneath right here for the first time. And we see this. And we see this. And then you see this. So let's clear this up and let me show you that a little bit more. All right. I like to trade the short side of crude oil more than I like to trade the long side. But if I was going to trade the long, I'd be looking at this right here and that crossover coming back. And this point right here would be where I'd want to be long. When that red line gets above and we cross back over, all that stuff right there. Now, what I want to do on this side, so this is, we're pushing away from the standard deviation mean. Now up here, I want to push to the standard deviation mean. So we talked about the bell curve last time, right? So this part of the trade is, if you're looking at this part of the trade, that's pushing out. So this part of this is that pushing out. And this coming back is this pushing back in. So that's that part of the trade. Hopefully that makes sense. Let's look at another example. We're here, and we're pushing up to here. Once again, that's like us pushing out from the mean. And here, coming back, although it doesn't touch, it gets close, is us coming back, that part of the trade. And once again, going up this way is us pushing out, and this coming back down is pushing back in. Hopefully we beat that as best I can. So the standard deviation curve, your normal distribution curve. So you got one, maybe this is one standard deviation, 2, 3, 4, 5 going out way out here. Just never know. And then the coming back is reverting back to the mean. Very important concept to understand. You're looking for the push out, and then the stop, and the push back. Now this is an uptrend. It'll be exactly the opposite in the downtrend. Let's go find one. Let's go find a solid downtrend. This is looking pretty good. This is looking better. All right. This is looking pretty good right here. All right. Let's use this point right here. And then let's, yeah, this is looking good. So here's our 0 point. Let's call this 0. Then we're pushing down to here, right there. Then we push up, right there. Then we push back down, right there. And we stay down all the way to here. So if this is 0, 1, 2, 3, then we're pushing down to here. And that right there is the other part. So we push all the way down to here. And then here. So here's 0, 1, 2, 3, 4, 5. So here's 2, 0, 1, 2, 3. So this part right here is the trade. 2 to 3. And then that part. 3 to 4. 4 to 5. 0. So 0 is up here. 1, 2. This would be 3 right here. My bad. 3, 4, and then this would be roughly all of 5. And that's the AB. That's why I'm screwed up right now. So even I get confused on wave count. But I know what I want to trade. I know I wanted to trade this one and this one. So that's why I was kind of confused here. It's easy to get messed up because you're looking at this as an overall. So we got that, we have that, we have this, and all of this until here, and then this, and then all of that is 5 until there. So 0, 1, 2, 3 is here, is what we figure out lately, and that's 4, and this is 5. So you want to take 2 to 3, 4 to 5. So you're taking the 2 and the 4. It's easier to see on an up because you're thinking up, up, up. But there's your wave count once again looking at. This is a nice move, huh? If you could have caught the whole thing. 28 down to 18. That's a $10,000 move. And from 30 right here, it looks like about 30 down to here. Let's call it 26. So that's a 4,000 move right there. So this was when we were going extreme. Right now, back in April 21st was where we actually made that cycle low, and the market turned around. So this ends up being, I believe, the overall low of the market. And in the May contract, this is when it went below 0 to the negative 37. All right. Let's see what else we can find. Let's find another downtrend. All right, this one's looking pretty good. Let's use this one right here. So here is 1, or 0, excuse me. This stays up here, comes down here. There's your 1 point. Up here is 2, right about here. So there's 0, 1, 2. So now we're making, should be making higher or lower highs, and we should be making lower lows. We didn't make a lower low here, but we do here. And as far as the eye can see, it's still low all the way through here. That's all part of the 3 move, because none of this here went above the 20 line. So this particular setup, if this was it, that would be the 3 point right now. So this move right here went from, looks 22.50 to call it 18. So let's call it 23.18. That's a $5,000 move right there. All of this is part of 3. It did not go back up here again. Let's go see where we can find that. Did not go up there. So 3 still was up. So this is 3. So here's your 3 point finally. Right here. There's your 4. And this is possibly 5 right here, depending upon what this is going to do right here. So this might be 5. And it is. This makes the ABC correction part of it. So there's A, B, C. So let's draw this out here. So this was, I think we considered this 4 and then 5 right here. There's A, B is here. This is all part of A. And then C comes up here. And you can see that it might be, this might end up being the 0 point now. It's hard to tell until you look back and you think, what was that wave? And you're trying to catch 0, 1, 2. In this case, 0. And you don't know until later on what the 0, 1, 2 wave pattern is. See what else we can find. Now here's a nice little setup right here to short. See all this right here? Another nice little short right here. Very interesting setup this one is right here. Let's bring that out a little bit. This was the setup right here. What was it right there? Let's see here. Where was it? This is it right here. So we're making higher highs. And then we go this higher high and then this point. So look at this. We have this against this, and then we have this against this, and then we see the sell-off right there. Could you have caught that? Well, I think you can. I think that you could determine a point where you'd want to be involved in that. And roughly, looking at a 10-minute chart, you'd want to be short right under here. You'd have to be willing to take this risk coming up, but you could have caught it roughly in here and not have as much of risk involved in the market. That's where it first breaks. The red line breaks here though. So if you wait for the red line, looks like you're catching it right about here, and you're catching this move coming down. So this could help you eliminate some trade decisions. When the red line finally comes underneath, your momentum of the market carries you for that whole trade. So we're going to add some more things into our discussion. We're going to add support and resistance. We're going to add where the pivot is. A couple more things, I think, at this particular section of talk that I just wanted to basically cover the cycle part of this, and also looking at wave theory. How do you count out the waves? How do you count out where your sweet spot is? Where do you want to be in the sweet spot? You basically, on a trend trade, you want to catch the 2 to 3, and you want to catch the 4 to 5 wave count. You want to catch it both on an uptrend or also on a downtrend. Top reversals, you're looking for them. They're usually signified by volume, which we haven't really talked about at all yet. But I use volume to help determine a top reversal, and also volume to help me determine a bottom reversal as well. So as we move forward in the course, and it might be the intermediate part that I bring in volume, it depends on how far I can get in the next hour of talking in the foundational course. So I've got roughly 2 more videos that I want to talk about. I want to bring in a couple more concepts to help you determine where you are. So as a review, what we covered today, we talked about cycles, but more importantly today we talked about Ralph Nelson Elliott and how he applied wave theory, and how you can use a moving average to keep you in, say, the 2 to 3 move and the 4 to 5 move. And we talked briefly how you could find a top reversal to catch a nice little trade occasionally. All right, this is Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. We'll see you on the next video I put together. Bye for now.